Undeniably, a gold and silver bull market is coming. And my top 5 market indicators confirm that while we are in the early stages, there is no need to fools rush in, but we do need to move quickly. This video is about helping you maximize your profits from the coming bull market, understanding these 5 key indicators. I want you to understand that you do not need to rush into this bull market, that you do have some time. And most importantly, I want you to understand how a bull market works and how the indicators can help you determine the right moves that will maximize your profits. If this is of interest to you, then you're watching the right video. Now, there's a saying that you should never ask a salesperson if you need their product. I think something similar can be said whenever you hear someone telling you that you need to do something urgently when it comes to your money and investing. Frankly, it drives me a little nuts that I see all this fake hysteria on both sides between the pumpers of silver is about to explode, silver to the moon, silver $1,000, and let's not forget the dumpers. They're coming for your gold, market crash is imminent, etc. When it comes to investing, rarely is there a need to rush in. As the great coach John Wooden used to say, be quick, but do not hurry. And while there are times that we do need to have a sense of urgency, we have to remember that hurrying or rushing in is when things start to go wrong. I believe this is exactly where we are right now with silver and gold. I say this because I don't believe silver and gold will really take off until the end of this year. The real urgency I want you to feel is not due to any of the geopolitics or anything else. I want you to feel the reality of most of us have a budget and we need as much time as possible to develop the position we want in silver or gold. So if you continue to stick around, I will cover my top 5 indicators which show me that we have time and will help you increase your profits. You don't need to hurry or rush in, but we do need to move quickly. Let's talk about it. So I want to be clear that I believe we absolutely have all the perfect conditions for a tremendous commodity bull market, which will result in a major shift in wealth. Precious metals are just one of the ways that you and I can take advantage of this moment. Even if you haven't purchased a single ounce of silver or gold, while it would have been better to start your stacking journey more than 5 years ago, there's still time, as we currently have a little bit of a sweet spot where the potential for downside is relatively low and the potential for upside is almost undeniable and unstoppable. So we must use this to our advantage, which will ultimately increase our profits. Don't take my word for it. Let's look at the facts, the data, and the market conditions. I want you to think of these 5 indicators like a set of dashboard lights, where some of the indicators have turned solid green, telling you like they're ready, and some are flashing green as almost ready, and others aren't even turned on yet. This is important because these indicators give us a little bit of a heads up to how close we are to kind of the systems are a go piece. So the first indicator I want you to look at is actually a collection of indicators, and it's based off of technical and fundamental analysis. As you can see on the screen here, since 2011, gold and silver have been forming this large cup and handle formation. And as you can see over the last year or so, we've been forming out the handle of that cup. And so that usually precedes a very large movement in price. And so that gives us very good confidence. In addition to that, back in January, gold was trading above its 25, 50, and 200-day exponential moving averages. And that's very critical as well. And that's called the golden cross. And so that is another signal that tells us gold is prime and ready. That indicator is a solid green. The second indicator is related to inflation and interest rates. The producer price index was 10% in February. Consumer price index has been increasing and well over 7%. But the producer price index is of particular importance because the cost gets directly passed to us as consumers. And we have other indicators telling us that we are likely headed towards a recession. In the last 80 years, 7 out of 10 times when inflation has been this high, it has led to a recession. Number 3, the 0.5% to the 1.5%. And really, this is based off of something that Rick Rule shared recently in an interview. And what he was referring to is we haven't seen large institutional money rotate into precious metals yet. And we haven't seen the return to the norm of about 1.5% of people holding precious metals. We are merely at 0.5%. And he said, quote, if we merely revert to the mean, I believe demand will triple or quadruple. I see that happening, end quote. And that indicator is very important because that tells us that we haven't seen the large rush of money that's going to cause tremendous moves. So again, we have a little time. The fourth indicator is your global green initiative. There are a tremendous number of uses for silver in the green movement. We haven't even started the green movement because that demand hasn't really reached its climax or its apex, and we still have opportunity to stack more of the silver and nickel or lithium or whatever metal you're interested in. The last one I want to share is the investor psychology chart. And this one's important because it helps you look at what's going on with people and understand, get a better sense of where we are in the market. I believe we are somewhere around the stealth and the awareness phase. So you already know you've been investing. When we talk about the awareness phase, we're talking about institutional investors, and the public hasn't even caught on yet. And when we start to get those institutional investors, we'll see heavy movement because they're going to move all that money that they have in stocks and all the money in bonds that aren't getting great interest rates, and they're going to come flooding into commodities, and we'll have a tremendous takeoff. And then there will be a bear trap. There'll be a sharp pullback. And when that pullback comes, that's going to be your next great buying opportunity. So you have a wonderful opportunity now, I think, until the end of the year to continue to add to your position. And then when the metals start to take off, there will be a strong pullback that will make people second guess. That'll be your next great buying opportunity. And then we'll be really off to the races. And that's when the media will start to give attention to it. The public will know about it. Cab drivers will be telling you about how much gold you should be owning, and you'll just sit and smile because you've been well positioned for years. So those are my top 5 market indicators. Now, don't you leave because I just covered all 5 of the reasons. I want you to do something else. I want you to hit the pause button and comment on which of these 5 reasons you believe is the most convincing and why. Okay, do it now. Hit the pause button. I'll wait. Thank you for taking the time to make a comment. I by no means am qualified to make any predictions. I don't have a crystal ball, and I definitely can't time the markets. But I have stayed at a Holiday Inn Express once or twice in my life. Some of you will get that joke later. Again, more dad jokes. Ultimately, I don't think anything can prevent this shift. They can only slow it down for a while. I truly believe there is still time for us to get our stack in order, to get positioned the way we want. But we do need to be quick. In this situation, I think it's better for us to be months early as opposed to weeks late, as the early stages truly offer some of the greatest opportunities for us. In one of my first videos, 8 Reasons to Stack Now, which I'm showing on the screen, I use attending a party or a club as an analogy for the bull market we are entering. The point I make is that as current investors, it's like we're at the club at 8 or 9 o'clock when it's just opening. And soon enough, everyone else will arrive at the club and the club will be packed. And at that point, it's going to be much harder to move around, get drinks, etc. And soon the silver and gold markets are going to feel the same way. Like drinks, metals are going to be harder to get. And unlike those that showed up late to the party, we will have had enough. We will see the warning signs and leave the club, aka exit the bull market, before all hell breaks loose. I will link that video at the end, and I strongly recommend that you watch it next. Make sure you comment, heck, even comment twice. Hit the like button and share your love for precious metals by subscribing. It would be greatly appreciated. Always stack smarter and never stop learning.